Alright, array. ARRY. Okay, on the NASDAQ, array BioPharma. I think I did a podcast a while back on this one. Set my alerts, but it was just doing my classic monthly candle chart trading framework. And right now, we're going to use that alert, a reason to go and look at what's happening with array. All right, let's move that monthly candle chart. Zoom it up. Monthly defined support, monthly defined breakout line. I think it's here. Breakout. 19th of July of June, end of June. If the price could stay above the 1744 level, 1740 level, and that's my implied measure move, just about here at the 2021 level. All right, that's pretty cool. That is pretty cool. So we have the monthly candle trend almost confirmed in our favor if we get a close above this 1741 level. 2 weeks to go or less. I'm going to use that and now go on the weekly to apply Stan Weinstein stage analysis. Just check it out, guys. Look at these candles here. Breakout right here. Am I looking to go in? Ooh. You see this red candle right here? And then you see, a lot of volume. And it closed red. And you want to know, did the majority of that volume happen on green days where the price closed up? Or did it happen on those down days? So we're on the weekly. Now we're going to use the power of the smaller time frame to get the zoom in, to get that granular look. You want to evaluate the real health of that. And you see, this is the week. Okay, let's go back. That week was the week of January the 22 to the 26. Just make sure I'm in a good place. 22 of the 26. Let's go on the daily. And what's this? 22, 26. Okay, this is 22. Monday probably. Tuesday, Wednesday. 25, 26. And then the next weekend. Let me zoom in. With that. So it's right here. So look, we had crazy volume on the up candle and pull back on those small candles. See how? So now you know it's healthy. So you get confirmation that this is not a reversal. It's a pullback. Worst case, sideways move, consolidation. And after that, you see on the daily that it starts picking up volume here. You start having breakouts right here. And we're going to look on the weekly. We can go back. But this is the granular view that you get on the daily to know the health. So all that volume that's in that weekly candle that we saw and was red, that's because it's only red because the price action closed below its starting point. Price action went down. But when you see the truth of it is, you had a lot of volume on that green candle on that gap up, and then you had the volume contracting on the pullback. Cool. Look in. Gives you lots of clues. Wait, what? That's not what I want to do. Let's go back here. Stand 5-year weekly. So right now you would have known that this would be good. You would have been having a pullback. And this is actually, you could almost consider that a breakout candle right here because it's above The real breakout that happened right here, right above here. Kind of weird, right? A red breakout candle. So a red breakout candle could happen if it's a gap up and then price action pulls back. Wow. Okay, this is the first time I ever saw this. So I'm going to keep an eye on out for this type of phenomenon if it happens over. Red candle, but the volume, it's red, but it was majority on the price action going up. Twice the average volume of the previous 4 weeks. I have my RSI going upwards above the halfway point, and then after that get the pullback within that candle the following week, and then continuation breakout with the volume here twice the average of the previous 4 weeks. Breakout, building a breakout, 30-week average skewing upwards. After that, you have that pullback within 1 to 3 months. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 weeks, 13 weeks. All the way back right here. All the way back. That's hard. You have to be emotionally ready to anticipate that. And if it happens on this super small volume, just like you're happening here, if this was your breakout line, 1380, then after that, these candles that start touching it, you would have put an alert just above it, maybe around here. And any of these candles trying to go through that, keep an eye on that. Red, 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 green, and then you know that you could probably re-enter right here. You have the bounce off the 30-week average, the green confirming that this was the lull. And after that, that's your second opportunity to get in. So either you miss the breakout, you see the situation, and all you have to do now is wait, and just wait, wait. Get back in, and then you get your second go. That's how you do it, because the volume's contracting. And that's a classic stand pullback. Get ready for them, and the more you can anticipate them and know when they're healthy pullbacks and not reversals, then you won't panic, you won't have fear, and you'll be able to make sound decisions when it's time to get in. Because trust me, when you know how it is, if it's down here, price action has been going down for all these weeks, 2 months, and you're saying, stock's game over, it's popped, it's going to fizzle, it's not working out. When it's people have the most fear, that's when it reverses. It's almost always like that. So right now, you have the emotional tools to control that fear, have explanations why not to have fear, and then after that, you'll be able to pull the trigger when it's time right here, and then move up. Just keep practicing it, and eventually you'll be able to buy on these pullbacks without fearing crazy news in the market. The product, it sucks. Whatever, CEO ran away with his secretary. That's the type of news that comes out when it's at the dire bottom. Remember contrarian theory? Stan talks about it a lot in his book. When you see the flyers and CNN and all that saying, to the moon, Dow Jones to 500 million, that's a warning sign. And the inverse is true. When they say it's the end of the world, then that's when you have to start looking at these patterns, at these pullbacks. Were they unhealthy pullbacks with contracting volume? Are you getting back to a previous close on the breakout? That's when you should jump in, guys. Not get scared. Okay, and that's where we are today. Right now, 1740, remember, my monthly defined breakout. Where if we close above that, we're great. And my weekly defined breakout level is 1835. So if we get to close above these two levels, we're golden. Today's Tuesday. It's gonna be posted on Wednesday. So what I'd like to see is volume Wednesday, Thursday, Friday. If we could get the volume all the way up here there, that'd be great. That means it's a confirmed stage 2 continuation breakout for array. It's already in the stage 2. It broke out here at these levels, remember? Pulled back, took a while, but it pulled back over 3 months. And after that, we're building up to continue. Even this candle here, you see, twice average. The previous 3 weeks. Gives you a burst. Sideways move on contracting volume. And now hopefully we get another burst above that, above these key levels. What's fun is we're going to have harmony with the monthly candle. No overhead resistance. We have the implied measure move on the monthly, bring us all the way to 2115. We have the stage 2 continuation breakout confirmed on the weekly. Guys, this is a stock telling you, buy me. All right. Keep an eye out for array, at least for the close of the week, if we get the volume. And if you're really patient to put all the chips on your side, wait for the end of the month, guys. Close above 1741. All right. That's it for me, guys. See ya.